Well, good day, all. Ira Epstein with your financial market wrap-up. In this wrap-up, I'm early today. It is Thursday, August 17th, and I know you're not going to believe it. It's 5:45 p.m. Central Time. And that's because, we're getting into the weekend. We're at the end of the summer. I, too, am going, I'd like a few days off here, even though I took one vacation. I have no intent of taking another one right away. But it's nice to do that. You take it easy. You got to come to the same term I do. As you get into the end of August, you get lazier, you're thinking blah, blah. Well, that happens in the market because people that want to take their final summer vacation, go away, they start closing up their vacation homes, or the kids are going back to school or whatever. It just changes. Today, I sent out the Labor Day trading schedule. So that just gives you an idea that we're already there. And I didn't make it up. I got that from the clearing firms. They're already passing them around. So that's exactly what is going on. Now, I did hear on CNBC this morning that Fed Chair Powell is going to attend Jackson Hole, and he's scheduled to speak on Friday. That would be great if he does do that. I'm certainly hopeful that he will. It'll be important. The markets will focus on it. The Fed is certainly watching all that's going on, and I want to make it clear that I put out a special report for you on the bonds and the notes that I think is so timely to what is going on. I always try to make something that I think makes sense. And before we get into the charts tonight, let me remind you, when I do these reports, I try to give you a whole group of chart analysis. That's what this is based on. You'll get my commentary as I talk over the charts, but I'm going to have in this one the price counts. Really important. The seasonal charts, I'm going to show you both the 5, the 15, and the 30 years. I'm going to cover the 30-year bond. The 10-year note and the 30-year bond are trading 12, 15 points within each other. That's nothing. Therefore, it was just a question, which one did I want to pick? Go to iraepstein.com under the word research. You can follow my finger, move your cursor up here, you'll see an icon. You can call my staff. If you go to the icon, it'll take you right to that area. It will go off my website in 3 business days total from the day that I publish. So it counts the 24-hour day. So it's Monday that it'll be gone. Don't bother me after Monday and say, I missed it, I was gone. Too bad. Get to it now, see it, all right? It's important. I think you'll see the probabilities of where you're at, what the market is doing. And the market, as I said, is doing the Fed's job for it. The combination of the Fed letting its balance sheet run off, the combination of the Treasury needing $1 billion or a trillion this quarter, which they're going through money like there's no tomorrow with big auctions, all pressuring the market and putting yields even higher. Can you get bounces here at any point? Why not? You've had almost a straight down move in some of these markets. Look at the stock market. Did I not just a week and a half ago give you a report and show you what happens where you get your August peaks in the market and how they start coming down? I think that report was right on the money. Now I'm hoping this one does. I'm watching the metal markets as they're getting a little bit of a bounce in them. Okay, I can see that. But the game hasn't changed. And there's margin calls and people worrying, where are they? The market has shifted according to Goldman Sachs. They came out with a report yesterday from some of their top economists, and they think the game has shifted now completely to one of selling rallies, not buying the dip. That's important news. How long that'll last, I don't know. The energy market's a little bit of everything, but listen, you're back under $80 in our grade in WTI, and you've given up the peak in this, but still a strong market. It's very concerned, and I think it should be concerned with how bad China is doing. It's a major buyer of oil, and you've got to pay attention. I didn't think this was going to happen, but here you are. I mean, if you and I go back on this chart, we were talking, and these videos are up on YouTube, could the market make a run for the 18-day average of closes? And we were talking about it. And, as you and I were discussing this, let's see if I can get this to move. And I can. That's good. All right, so here you are. You're up here on July 28th. This is a weekly chart. Is the market going to break? If so, this is the only support level I have. You can see how they're making a move together. This is a week ago, August 11th. And now we're going to hit the 18th. Look at this. You don't have to break very much. You're 20 points away from hitting that target of the 18-day average of closes. The leak in this market has been tremendous, and my work has done its job. Take a look. Lower highs, lower lows on the swing line. I'm going to come back. This is a chart without the swing line. The swing line changes everything. It makes it easy to see. If you, by the way, use TradingView, any of you, all you have to do with TradingView is go to our website, go under Client Resources, that's iraepstein.com, far right, Client Resources. You'll see TradingView, sign up, and you get the whole suite of everything that I've got here. The swing lines, window envelopes. You will get the slow stochastics, my version, which is very different than the one you have. That's why my numbers don't match up with yours. It's all there for you. So just go to the website and sign up. In any case, lower highs, lower lows on the swing line. Then you've been underneath the 18-day average of closes. What do I teach you consistently here? The filter on your work is this number, the 18-day average. I'm only looking for sell signals when I'm under it, and I'm looking for buy signals when I'm over it. It keeps you really in the game. Pay attention. Very important. Do we commonly get rallies back to test this number? Of course. When you were over it, you fell, came up, down, fought your battle against it, and then let go. I can go over and over with this and show you what I'm saying. And that's because so many people use it. And at first I was going, oh, you don't want to be with the herd. That is so untrue. When Michael Jordan was playing basketball in Chicago, I was so in love with how they have the arena and all the noise, and then the videos would come up in the center, and it was inevitably the Chicago Bulls, so we had bulls running down the street. And I would tell people in seminars that I was holding, those were the old days when you did them in person, I go, that's what you want to be with. You don't want to be the guy they're running over. You want to be with the herd. And this is what this does. It keeps you with the herd of the market. And that's where I want to be. Now, you keep hitting the Bollinger Band, staying with it. Right in this area is where major support is, from here to the 43.40 level. So I can see that if traders wanted left field out of nowhere to take profits in this market, that they could. But is anything changing the market? Not really. You'd have to get the red line to close over 21 to tell me that you've broken the down leg momentum, that part is over. Doesn't mean you turn into upside momentum, but you've broken that. That doesn't look like it's anywhere near doing that to me. So I still think even if you get the rallies, the bears have control of the market for a while here. You've got the embedded reading in the NASDAQ. It comes right back. Notice how the market is orderly, paying attention to this number. If, again, you listen and you say, okay, you actually had lower highs, lower lows. You've had this in play. You may not be short, but you know not to be long. So if you're sitting there going, oh, why am I long this market? You're not paying attention to the basics as a chartist. The Dow is not embedded. So this is still a market that's oversold. It's joined in price momentum. You've been under the 18-day average. It fought a big battle there, the only one to really fight very hard to see which way it goes. But it's only 30 stocks. And it has AI in it. We know what's going on. And again, what was it? AMD today's earnings were very, very good, and NVIDIA's coming up, and I'm sure they're going to be stellar too. At least I hope they are for the company, because everybody's in that stock. I don't think I want to be in it right now. If you watch my Spider ETF, you'll see why. I've been saying that for a bit here. And as I take a look at the market, it can fall. I mean, the major support's the 100-day average to the 200. Why would you want to fight that? All right? Doesn't make sense. In the Russell, you're into the major support. You're back to the 200 and the 100-day average. You've been under this average. You're embedded. Why would you even be thinking the long side? I'm lost. Yes, on hard rallies, you want to get short. This is a danger zone. I always tell traders, hey, major moving averages have a way of stopping declines, or at least pausing them. Doesn't have to stop them, by the way. I don't know that this will stop. You're only at August 17th. Your week period is now well into September, if the seasonals are going to hold up. No one knows that. I don't walk on water. I don't know. In the T-bond market, I'm going to repeat, you got now an embedded reading. You've been under this for how long? It has been very difficult to be short the market, but it has been, from my perspective, impossible to be long. Every piece of work I have would never let me tell a client to buy this market, not one. Since back here, this is mid-July, and the market has been coming down. As we take a look at notes, different type of play. Sideways action, not as ugly a chart as the 30-year bonds. Now it's locked into a bear trend again. It is not embedded, so it's oversold. It's ripe for a correction, but that's what I can talk about. A correction. Does it have to? No. Would I play for the correction? Absolutely not as a chartist. Everything here is saying you're under the 18-day average of closes. Why am I looking to be long? I'm looking for reasons to be short. In the dollar, I've been telling you, I think between the 200 and the upper Bollinger Band's resistance, you're embedded. Yes, you can get corrections out of left field, but as long as this is embedded until the red line's under 79, the breaks are still buying opportunities in the market. And the flip-flop is true. It's been bearish in the euro, but I've been mentioned to you starting today's Thursday. I had to be doing this since Monday. Be careful. I think the pros are taking profits at the Bollinger Band 200-day average. Doesn't mean you can't go lower, but it's a high probability area to take money off the table, waiting to sell more rallies as long as the stochastic stays embedded. All we did in the British pound is bounce off the Bollinger Band back to the 18-day average as it did here. Now, it's not in a trend per se. It's got a higher high and lower low. It's worked off, past tense now being oversold, so it's looking for something to do. Whoa, what is going here? If we take a look at how much money this market has lost in the past 2 days, I want to get over here. Right here. All right. Here you are at 29,115. It seems so long ago. It was Tuesday. 2 days ago. Market collapses today, goes down 29,130. And look at this. This is where you're at right now. Wow. So you dropped almost $3,000. Funniest part is I went to Bitcoin News tonight, and I do appreciate Tom Lee. He's with Fundstrat, and he gives his opinions. He has been terribly wrong for years. For years, Bitcoin. He at first was hundreds of thousands of dollars that it was going to. It's going to be a $300,000, $1 million market. You know, I can say that about Apple. I mean, eventually maybe that's true with all the splits, but this market is not what I'd call bullish. I'm reading another person tonight comes out. This is it. This is the washout. As long as you're under this number, be careful. You're under the Bollinger Band. You don't want to be short under Bollinger Bands. You're down hard, but this is a washout. This market's looking for reasons to rally, and it's not getting them. Where's this ETF news? Did it leak that it's not going to be approved right now? I don't know. A couple of days ago, we thought we'd get something on that right away. In Brent versus WTI, it peaked out at 440, narrowing in, which means that Brent is now a little bit weaker, all right? And here you can see what's going on. You're out of a trend, by the way. You're now going into a sideways status in this market with a higher high and lower low. You've done the same with WTI, oversold as well, by the way. Gasoline still coming down, not yet saying, hey, jump on. And here's the interesting thing. I wrote about this tonight and pointing out to people that the seasonal in gasoline right now, and there is one also in the distillates, the fuel oil, heating oil, jet fuel, kicks in right now. From here, another buy signal kicks in historically. Doesn't mean it'll work, by the way, history. the 20th, and they go to about the 28th of September. So you're coming into that 1 week where you normally get a move up. Let me tell you how I use seasonals like that. And even with the reports when I put it in, the chart action has to agree with the seasonal. And if it doesn't, you don't play the seasonal off a chart that's bearish. This chart's not there at this point in time. It's that simple. So I watch, I understand what it's supposed to be doing historically. But again, history, nobody told me history is going to guarantee my future. And by the way, these are high probability trades off a 15-year basis. That doesn't mean they're going to work. But I look and I study it really hard. Nat gas still under selling pressure. And as I told you, I thought you'd have on this break support between the 18 and the 100-day average. If this decides to give ground and you get under 256.80, you open the door up for 244.60. But this is the first area where I think the pros are now saying, do I want to press the market or not? And this could hold them back. So remember all that. We'll see how these markets do. Do keep in the back of your mind, big breaks all week long in a lot of markets could lead to some Friday profit taking. Traders say, hey, I'll take a fresh look at the market Monday. Then we have our last full week of trading before the Labor Day holiday that shortens the week after that one. So keep that in the back. Again, if you want to see this report, go to our website, iraepstein.com. It's under the word research. You can move your cursor to the top here, look at it, and I'll see you all tomorrow. Take care.